Welcome back, D-traders. Let's discuss the red-hot market analysis and a forecast from InstaForex experts. Wall Street was overwhelmed by pessimism for the whole of February. The benchmark stock indexes closed in the red on the last winter day. And today the market perks up in the light of a fresh evidence of a recovery in China's industry. Yesterday, the Dow Jones lost 232 points or 0.71%, the sharpest intraday loss among its counterparts. The Nasdaq closed almost flat with a 0.1% downtick. The S&P 500 shed 12 points or 0.3% to close at 3,970 points. The major stock indexes opened with the gains on the first spring day, and the Dow Jones opened with a minor 0.02% growth. The Nasdaq and the S&P 500 grew by 0.2 and 0.5% in the New York pre-market, and the S&P 500 is expected to trade in the intraday corridor between 3,940 and 4,020 points. After a rapid rally in January, Wall Street indexes declined in February. The macroeconomic data and the hawkish comments by the Fed's policymakers assured market participants to bet on the higher ultimate size of the key interest rate. The stock market predicted a faster downturn in the U.S. economy that could force the U.S. Fed to make a pause in rate hikes or decrease interest rates earlier. In practice, the bench of upbeat economic data in February wrecked such hopes. The strong economy and the healthy labor market amid stubborn inflation made the market revise interest rates forecasts. In early February, investors reckoned that the funds rate would reach its peak at 5%, and they now think that interest rates would stand at 5.4%. The Bank of America ventured to suggest that the U.S. Fed might raise interest rates to 6%. Besides, at present, there is a 23% chance that the central bank would shift to sharp rate hikes by 50 basis points. The market sentiment was dampened for the most part of February, and still Wall Street regained modest optimism on the last winter day. On Tuesday, market participants found out that consumer sentiment in the U.S. unexpectedly worsened in February. Besides, the house price index went down lower in December. Following the economic data, yields of the two-year treasuries dropped, thus propelling growth in the Nasdaq and the S&P 500. However, both indexes lost steam in the late New York session. The Dow Jones was pushed down by Goldman Sachs shares, which lost 3.80%. The CEO said that the bank was considering strategic options for its consumer businesses. Meta shares jumped by 3.19% after Facebook's parent company revealed its plans to create premium products on the grounds of artificial intelligence. Target shares grew by 1.01% after the retailer announced an unexpected rise in sales in the final quarter, but warned about a weaker sales revenue in 2023 due to uncertainty in the U.S. economy. To sum up, the S&P 500 slipped by 2.61% last month. The Dow Jones sank by 4.19% and the Nasdaq dipped by 1.11%. Today, global risky assets reversed upwards because China's industrial activity expanded at the fastest pace in more than a decade. Moreover, investors regained the risk-on mood on the back of a higher-than-expected CPI for the Eurozone, which dealt a blow to the government bonds. Germany's CPI showed that inflationary pressure escalated worse than expected. The same was recorded in France and Spain. The ECB responded with the hawkish comments, and optimism on Wall Street could be cemented by corporate news. According to media reports, Tesla is going to upgrade the production of its most popular Y model. It means that Tesla is on the way to offering a new version of its most popular models in the next couple of years. Twitter was unavailable to thousands of users on Wednesday. More than 4,500 users in the US reported access glitches on the social media platform. General Motors announced the layoffs of hundreds of salaried employees in a cost-cutting plan. The company aims to save $2 billion over the next 2 years. The report worthy of note will be an ISM manufacturing PMI, which is due during the New York trade. Minneapolis Fed President Neil Kashkari will comment on the red-hot data. The US dollar index is overwhelmed by the doom and gloom. The euphoria from the recovery in China's industry and the hawkish mood among the ECB officials drove a 0.7% intraday fall in the US dollar index. It's likely to trade in the intraday corridor between 103.80 and 104.70. The US dollar index rose by 3% in February, the first monthly rise after a 4-month losing streak. Still, the index is about 9% below its 20-year peak printed last year. The US dollar weakened while the yuan advanced in the light of China's upbeat manufacturing PMI. Business activity in China's industry expanded at the fastest pace since April 2012. The euro gained ground on the back of Germany's CPI, which escalated fears of a stubborn inflation. And the long-term outlook for the US dollar is bullish. Fed funds futures suggest that the federal funds rate will reach its peak at 5.4% by September. Other central banks can hardly be equally hawkish. This gives some advantage to the US dollar. And next week, market participants will clear up whether the US dollar will be able to continue its recovery after Fed Chairman Jerome Powell makes his semi-annual testimony for the Senate Banking Committee. Another event of crucial importance will be the US non-farm payrolls for February. Until then, the US dollar index is expected to trade in the corridor between 104 and 105.20. A notable decline in the greenback benefited its Canadian rival. The USD CAD pair slipped by 0.38% intraday to trade at 1.3599. The intraday corridor for the pair is defined between 1.3570 and 1.3640. Unlike other commodity currencies, the loonie gave a muted response to the prospects of a recovery in China, and the reason is Canada's GDP released on Tuesday. The Canadian economy did not log any growth in the last 3 months of 2022, though the economic output could have rebounded by 0.3% in January. The GDP data could soothe the Bank of Canada because high borrowing costs erode domestic demand. On the other hand, the regulator could take a cautious approach. All in all, GDP data is not enough to update the forecast for interest rates. The obstacle to the loonie strength is a decline in oil prices. Crude is trading lower Wednesday, having lost previous gains because of the signs of a robust supply and the growing oil inventories in the US outwine and jump in China's industrial production. US oil inventories rose by 6.2 million barrels last week, the industry report reads. The Energy Information Administration is due to release its data later today. So Brent crude slipped by 0.5% to trade at $82.96 a barrel, and WTI dropped by 0.6% to trade at $76.56. The crypto market welcomed the news on the recovery in the second largest global economy. Today, crypto assets are trading in the green, though strong data from China is not enough. Bitcoin climbed by 3% intraday and tested the level of $23,750, but it was a failed attempt again. At the time of recording this video, the flagship crypto rebounded by 2.2% to trade at $23,765. As for the news on the crypto industry, FTX former engineering head Nisha Singh pleaded guilty of criminal charges in New York and agreed to cooperate in the attorney's investigation. Nisha is deeply sorry for his role in this and has accepted responsibility for his actions. Clients of the crypto lender Voyager voted for bankruptcy. According to Chapter 11, the company stated 97% of clients voted for this move. As for Bitcoin's intraday outlook, another failure to protect the level of 23,750 puts the bullish prospects at stake. If the token surpassed this level, the price could rise to $24,500. Otherwise, Bitcoin is running the risk of sliding to 22,800. Despite the optimistic pre-market, we remind you about the ISM manufacturing PMI and the US oil inventories data, which will be on tap tonight. The data could change market sentiment. And we wish you gainful trading and see you online tomorrow.